Okay, so you've made the decision to sell your business. There are going to be several things that you'll immediately do, like speak to your accountant and start getting your financials in order. But something I wanted to talk about is mentally preparing for the types of buyers that you're going to consider for your business. So you're going to have several options. And I think it's important to give this some consideration because it does become important, especially as you get deeper into the process and you start to receive inquiries on your business and questions. It can be challenging if you're having to explain your industry to somebody or if someone's just super focused on the financials because they're coming from an investment group and they don't actually plan to come in and run the day to day. So, types of buyers that you will encounter. Typically, you can look at a friendly competitor. That would be a good type of buyer. Might not be your first choice. Some people really don't like that idea. But a friendly competitor is a good choice. The good thing about that is you could probably do your deal without a business broker. So you could save on some commissions. You could work with your lawyers and accountants to do that. I know of a person that was looking to sell their business and I worked with them for a short time. And instead of selling their business, they educate themselves on the process and they went out and they bought a competitor, which I thought was pretty great. They didn't use a broker for that. Individuals that will be buying businesses, there's a group that I call the corporate escapees. These are people that have been in corporate jobs for about 15 to 20 years and are just sick and tired of it. They're sick of the grind. They don't feel like they're doing anything meaningful. Empty nesters is another good one that you will sometimes see. That could be a couple that decide they want to run a business together or a mother, that her children have now gone off to school and she's got more free time on her hands. So empty nesters, corporate escapees. And then there's another type of buyer. In my firm, we get inquiries daily from these people, and those are called searchers. There is a website called searchfunder.com if you wanted to look into that and learn a little bit more about what they do. But these will be people who are engaging in entrepreneurship through acquisitions. And this has become very popular in recent years. And they typically will have access to capital. They'll be looking to buy several businesses and group them together. They like to see a slightly higher cash flowing businesses. So I know for the inquiries that I get, usually they want to see about 500,000 a year in sellers' discretionary earnings or EBITDA. But just for the sake of this video, because we're talking, from the business owner's standpoint, we can just call it cash flow. It's not technically 100% right, but it's good enough for this. So those people, they'll want to see about 500,000 a year in net profit. So just bear that in mind. But those are the types of buyers. An employee. I know a lot of times that business owners don't think that employees can buy the business because maybe they don't have the money, but the SBA has some really good programs where they don't need a lot of money down. They already check the box of knowing the industry, knowing the business. That's really important for the financing for the SBA. They want to know that somebody can operate and will operate well. Think about your employees too. You could help them by holding some sort of seller financing as well as helping them to get an SBA loan. In this instance, you wouldn't need a business broker. You could use a business broker, but you wouldn't need one and you could save on those fees. Those are the types of buyers you'll come across once you've decided to get your business listed for sale. But I think thinking it through and seeing what will feel right for you is important. I wouldn't ignore that step because you may find that you end up wasting time speaking to people that you wouldn't want to sell your business to.